Good morning, everyone. Welcome to another episode of the Mizuho Week Ahead. I'm Jingwen, market economist at Mizuho Bank. This week's theme is Between Hopes and Doubts. Markets were caught once again, oscillating between optimism and skepticism over a US-Iran deal, with sentiment shifting on each headline. Despite earlier reports of a tentative deal between US and Iran last Friday, President Trump has returned a revised draft framework to Iran over the weekend, with tougher terms while reiterating that he is not in a rush. Meanwhile, Iran has threatened to suspend talks over Israel's attacks in Lebanon. Oil paid some gains to trade around US $95 per barrel after Trump said Hezbollah and Israel has agreed to stop their attacks. On the data front, US data was generally mixed. PCE edged higher in April even as personal income remained flat, pointing to a growing squeeze on consumers as prices outpace income growth, although a softer core PCE print offered some reassurance on inflation. Elsewhere, Q1 GDP was revised downwards and initial jobless claims ticked higher, while ISM manufacturing data showed the manufacturing sector expanded for the fifth month with buoyant new orders and higher production levels, even as the prices paid sub-index remained elevated. This sets an uneasy backdrop for Kevin Walsh, sworn in last week as the new Fed chair. His speech, invoking Greenspan and calling for the Fed to escape static frameworks and models, signaled meaningful regime change ahead. Meanwhile, Fed officials continued to strike a cautious tone, with Musalem, Williams, and other members flagging that persistently elevated inflation could warrant higher rates, although Vice Chair Jefferson highlighted downside risks to the labor market. Across the Atlantic, ECB April minutes revealed a close call with a hawkish lean and an uncertain impact of the energy shock on growth that kept the board cautious. Over in Asia, BOK held rates in a hawkish hold with two dissenters out of a 7-person board and a dot plot pointing to 50 bips of hikes in the next 6 months. Together with upward revisions to inflation and growth, reflecting inflationary concerns, the base case is for 2 rate hikes for the rest of 2026. Korea's May CPI print also showed signs of broadening inflation, affirming markets which have priced in a rate hike in July. Meanwhile, Australia's April CPI was a mixed bag. Although headline inflation is and edging up of the trim mean with the upcoming expiry of the fuel excise tax points to inflation remaining above 4% in the second half of 2026. This solidifies a June hold by the RBA after 3 successive rate hikes. For the week ahead, markets will be watching whether US and Iran can reach a durable agreement, even as the path to a clear resolution may prove protracted. For India, we have an out of consensus call for the RBI to hike its policy rate by 25 bp at the upcoming meeting to provide further support for the rupee. The hiking of fuel prices for 4 times in May and rising pipeline cost pressures provide sufficient grounds for a rate hike to anchor inflationary pressures. Australia's Q1 GDP is expected to remain resilient, led by a surge in capital expenditure, although consumption stabilization masks underlying discretionary softness and net exports remain a drag. All in, EM Asia FX continues to contend with the twin headwind of elevated oil prices and USTUs, with the resolution hinging on whether US-Iran negotiations deliver on their promise. For more information, please refer to our Week Ahead publication or contact your respective sales desk and RMs. And for regular notifications on market views, please subscribe to our channel and hit the notification button. Thank you.